Hello and welcome to this week's EZIRA Hangout number 13 on today, the 24th of June 2018. It's lovely to have everybody here today for this week's Hangout, and we've got some major updates to the EZIRA Whitepaper that have been in the works for quite some time now, but they're ready to be discussed with the community to get some feedback on the changes that these new implementations of the EZIRA protocol will have on the experience, I believe, for the better. So first off, for everyone here who is listening on YouTube and who is new to the EZIRA Hangout, first thing we'll do is introduce everybody with the question, what is EZIRA? What is EZIRA? EZIRA is a protocol for blockchain social media with a decentralized exchange and a peer-to-peer marketplace. Users can make posts on boards, groups, or profiles and encrypt them to make them private. Businesses can create crypto assets to represent voting power and distribute revenue. Merchants can list products for sale and receive free and virtually instant payments from customers. Users earn rewards when they post valuable content, earn tips, and can charge micropayments to access premium content. Supernodes earn rewards for providing file storage through IPFS or the Interplanetary File System. The EZIRA protocol earns revenue by selling account membership, post promotion, and charging trading fees. Every EZIRA interface can choose which content to display and how to sort it. The protocol has no censorship. Users can choose which identity to use for posting, whether it be their full profile, their persona, or anonymous accounts. EZIRA users and applications that create accounts for new users earn an ongoing share of the revenue from those users. So EZIRA enables essentially a combination of blockchain social media that has been popularized by Steam and the other graphene blockchains, with a decentralized exchange that has been implemented effectively by bitshares and a peer-to-peer marketplace that has been implemented on a growing success by the Open Bazaar project. So what EZIRA aims to do is to bring those three main paradigms of cryptocurrency economic activity and bring them into one application onto one blockchain where a single account can do all of those things from the same platform. With the high-powered graphene blockchain that has been powering the majority of the transactions that take place on cryptocurrency for quite some time now, the most popular blockchains are the Steam and bitshares blockchain with hundreds of thousands of transactions per second, or per day rather, that have been recorded, and they blow legacy blockchains like Bitcoin and Ethereum well and truly out of the water in terms of the amount of transactions that they serve, and in many ways the amount of active daily users that they enable to interact with those blockchains and actually make on-chain transactions. So next up today we'll go into this week's project updates. So this hangout will focus primarily on the upcoming changes to the EZIRA Whitepaper in detail. So the first major change that this whitepaper will be introducing that hasn't been discussed fully previously is the promoted posts changes. So promoted posts now distribute a portion of their revenue, that is the amount paid to promote them, to the interface that displays them to users, the interface that sells the promoted post itself, and to the supernodes that host the content data. Promoted post creators can decide which on-chain action is counted for performance, and the expenditure is divided according to the promoted post's transactions, and we'll talk a little bit about that later on in this week's Hangout. Project timeline changes. So the mobile application, the business account creation feature, and events were all isolated as key portions of the EZIRA project lineup that needed to be moved earlier into the project's timeline. So it is critical that EZIRA reach a mobile audience, that there are functioning business accounts from day one, and that there are functioning event pages from day one, as they are the key vectors for EZIRA to make an initial business impact by allowing people to create events at a local level without using ticket providers from legacy institutions. We've isolated that as a critical early area for EZIRA to gain mainstream adoption, as that is something that can be very easily solved using technology that mostly already exists today, to create user-issued assets for event ticketing, and then to link those to a profile account in order to grant access to specific people who have purchased one of those event tickets. We isolated this as the main asset type, or the main business application that we can take to the grassroots for a high density adoption in specific areas on day one. So we'll be moving this to a much earlier place in the EZIRA timeline. EZIRA stealth transactions were isolated as something that had a higher ratio of difficulty to initial usefulness. So we've decided to move that back to the gold release in order to prioritize some of the usability features, especially the mobile application, to be ready as soon as possible. So EZIRA Stealth has been moved back to the gold release, and the EZIRA consortium businesses that have been discussed in the business and application case have been included into the diamond release. So that's the final release that is being discussed in the EZIRA whitepaper, and that now makes reference to the business and application case that contains the EZIRA production businesses for content like EZIRA Studios, EZIRA Recordings, EZIRA News, and payment gateways for fiat currency like the EZIRA Pay franchise and the EZIRA Lend peer-to-peer credit market middleman participant business. So those businesses are now referenced in the EZIRA whitepaper, and they will be founded and initiated on-chain as the founding members of the EZIRA consortium in the diamond release of the EZIRA network. So the last one that is going to be highlighted in the project update today is the voting bot changes. So one of the problems that have been a detrimental factor to the popularity of the Steam blockchain in terms of content quality is quite simply the ability to purchase, outright purchase a spot on the front page of trending on Steam by going to voting bots such as those listed on Steam Bot Tracker, is I believe the website for that. It is, yeah, Steam Bot Tracker. That shows you a list of all the bidding bots that can be sent Steam and Steam-backed dollars, and they will upvote your post regardless of what it is or how good it is. And that is, it's a misallocation, I believe, of the ability to decide how posts are voted. Instead of it being sorted by the community's perception of the quality of the post as was intended in the Steam whitepaper, the content rewards are now being sorted almost entirely, if not pretty much entirely, by an author's ability to pay upvote bots. So that is a negative externality that is happening due to people offloading their responsibility to upvote posts to these voting bots as a way to earn a return on investment from delegating voting power to these bots. So it's in the economic interest of all the participants in these voting bot systems to continue doing what they do, because those who delegate voting power earn an ongoing return on investment for their Steam, and those who operate them are able to make considerable amounts of money by literally selling their voting power. So what EZIRA will be doing to mitigate this issue, at least in its most serious forms, is by including an element in the EZIRA content rewards formula that causes voting power to decay when users vote for the same authors repeatedly, which mitigates the potential reward for using voting bots. So there's no way to go after the incentive structure that exists for voting bots at the moment with the current Steam blockchain, because this will require a fundamental shifting in the way that content rewards are allocated. And there's no easy way to do it especially because the incentive for them to exist is so strong, because people naturally follow the path of least resistance to getting the highest return on investment for their Steam assets. So it'll always be in the incentive structure to delegate that to someone else in order for them to vote on posts on your behalf. And because these voting bots are earning curation rewards on top of the amount paid to actually purchase the vote, they're earning a higher return on investment than anyone would be able to earn individually by actually doing organic curation. So what EZIRA will be doing is decaying the voting power of a vote made to the post of the same author within 7 days by 20% per vote. So what that means in practice is that every time a person actually pays an upvote bot, that voting bot will either need to reduce the amount that is used to vote on each post by 20%. It'll cost them effectively 20% more to continue to vote on the same person each time they do it within a rolling 7-day window. So they'll either have essentially a 20% increase in the amount of voting power required to make the same cost of vote, or they'll have to reduce the cost of the vote by 20%, or something in the middle is probably what may happen. And that'll be a witness parameter, so if the problem persists, that 20% amount can be either increased to 30% or even 40-50%, depending on the economic outcome of what results. And the rolling 7-day window period could theoretically be increased to 14 days or even 30 days, whichever numbers the witnesses choose to mitigate the issue of voting bots being economically viable. So what this does is it gives every EZIRA and EZIRA power holder an even greater incentive to earn their own curation rewards by finding new authors that have made high quality content that can be upvoted by their account. And it also encourages new authors to make new posts, because there'll be more people willing to make upvotes to new accounts that have high quality content, because this provides an incentive for people to be on the lookout and ready and exploring the new queue or the rising queue, or whichever queue they choose, to find high quality content that's been made by an author that they haven't yet upvoted in that 7-day period. So moving on to the next part of this week's Hangout is going to be a more in-depth discussion of the changes to the white paper. So what we'll do is we will pop the white paper up onto here so that everyone can see. So another one of the major changes that have been made is to the EZIRA holder reward. So previously this was a payment of, or a reward of 20% of the issued EZIRA coin to accounts that hold EZIRA. So this this reward incentivizes the holding of a massive amount of EZIRA and not actually any valuable activity. So what has been changed, and this has been discussed previously, is that EZIRA holders, the EZIRA holder reward rather, will be distributed to accounts that at least claim one activity reward in a 30-day period, and that have voted for at least 10 witnesses. So I'll just try and find that. It's here. There it is. Okay, so the EZIRA reward pool distributes 20% of the EZIRA coin issuance to the holders of EZIRA on a daily basis, and this can be claimed once per week. So rather on a weekly basis, not a daily basis. So accounts start earning this reward after they've fully powered up their EZIRA, and that takes 4 weeks, and that'll be obviously starting from the Genesis block. So each balance that has an EZIRA allocation in the Genesis block will have this turned on from the start, and then once EZIRA is moved, then it needs to be held for 4 weeks in order to be activated as fully powered up EZIRA. but EZIRA is always liquid, so you can send it around, but it only earns this holder reward after it has been held for 4 weeks. So in order to claim this percentage of the EZIRA coin issuance, each account needs to have voted for at least 10 members of the witness, developer, advocate, and marketing reward pools. I've claimed at least one activity reward in the preceding 30 days and hold a minimum balance of 1 EZIRA. So essentially, there is a small capital requirement to earn that EZIRA holder reward, and this is the important part. There is now the opportunity for people to double their relative allocation of the EZIRA reward by completing more than half, or at least half of these bonus requirements. So voting for at least 20 members of each of the reward pools, or updating them in the preceding 30 days. Purchasing or selling at least one product on the EZIRA marketplace, making at least one exchange trade on the DEX, having claimed at least one EZIRA coin in content rewards in the preceding 30 days, holding a minimum balance of 10 EZIRA, referring at least one new account that holds a balance of at least 1 EZIRA, and that's not with a time limit, so at any point after that account has been referred, then that qualifies the user for this bonus allocation. Having created a board, and that board or event or group has at least 10 posts in the preceding 30 days. The account has mined or witnessed at least a block, has received a distribution from the officer reward pool, has created an asset that's been traded by at least 20 accounts with a minimum volume, and has claimed at least 10 activity rewards in the preceding 30 days. So there are a large variety of different qualifying points, and if an account completes more than half of those, then they have their EZIRA holder reward doubled in that week period. So that's one of the changes there. So that encourages people who hold EZIRA to make a contribution to the network, and discourages the leaving of EZIRA on an account only to earn returns without actually contributing to the network. So there is a continual incentive to actually interact with the network in order to earn a higher EZIRA holder reward. So that's one of the changes, and this is all in the new EZIRA whitepaper, which has been released into the Telegram and has also been released into the Discord. This will be finalized pending community review in the next 7 to 14 days. So I'll move on to the next major change, and that is the changes to promoted posts. So we'll just move along there. Also, there has been a few changes to the EZIRA membership tiers, and there is now a much more informative graphic that shows a comparison directly between the levels of membership that an EZIRA account can hold. So each higher tier has a lower maximum monthly issuance, which makes each unit a bit rarer and causes the price to float with auction demand. They all enable the disabling of promoted posts across all interfaces. They give a specific balance of free premium partners content. So when an EZIRA member account wants to access premium content that's been made by an account that has activated premium partners, that account can access that content for free, and the author of that content earns a share in the membership revenue, proportional to the amount of funds that is used from this content balance to actually purchase access to their content. So you get essentially like a balance of free content each month, and that balance increases with the level of membership. There's a boost to activity reward, You can access the featured page, the officer reward pools, a boost to the promoted post expenditure increases with membership level, a fee discount, promoted post bonus, a bonus post promotion rather on every piece of content that's created, a boost to the receipt of content rewards by 10 and 20% for the 2 highest membership tiers. And the main feature of Diamond membership that is important is that it makes those accounts eligible to be governance addresses. So the EZIRA network will not have any fixed governance address. In fact, any account that holds a Diamond membership can nominate themselves as a governance address, and they can receive a portion optionally chosen by each account of the revenue spent by that account. So that means that interface providers, account creation service providers, and important ecosystem actors can make themselves eligible to be a governance address and receive an ongoing portion of the revenue of those accounts that choose them. So it's been simplified a little bit. The membership features have been concatenated into a little bit of a smaller space. The descriptions of posting types have been moved over from the technical manual over to the white paper. And the content rewards have been left relatively the same. The promoted post changes have been put here. So what was previously the case was each promoted post would be able to be randomly selected based on the amount of EZIRA coin that had been used to promote it. So that is not going to result in a good selection of promoted posts for users to actually view. It's my view that promoted posts should be relevant to each account user, and without a central party deciding which promoted posts are displayed, what will be done is each interface will choose a set of supernodes to calculate which promoted post should be displayed in order to maximize its reward from the following mechanism. So when a promoted post is created, 10% of the expenditure is it goes to the supernode that serves the promoted post file data. 20% goes to the interface that displays the promoted post, and 20% goes to the interface that sells the promoted post. So anytime that you interact with the EZIRA network to purchase a promoted post, the transaction that creates that refers to the interface that is used, and that interface earns a share in the content, in the promoted post content fee that is paid. So essentially each promoted post is able to specify an on-chain action depending on its type that is counted towards the costing mechanism. So these distribution shares are divided between the different interfaces and supernodes according to the amount of actions that they deliver. And for example, for link posts, it might be cost per impression. So impression would be counted by the interface, and in the case of impressions, users that make the promoted post specify a whitelist of interfaces that are allowed to claim impressions to ensure that false impressions have an ability to be disabled if specific interfaces start to falsify impression data. The same thing would be the case for click-through, and view is an on-chain transaction. So each on-chain view transaction is linked to the interface that creates it by referring to the interface, and that interface earns a share in the content reward in the promoted post payment that is made. So each promoted post creator can specify which action is used to distribute their funds between the interfaces that actually display the posts and that sell them the ability to create promoted posts. So that aligns the interest of every interface to show content that is relevant to users without relying on a central third party to actually determine which advertisements or promoted posts are actually shown to users. So these calculations will be made by super nodes, and each interface will choose which super nodes to do these calculations on their behalf. So that's not specified in the protocol how to choose the promoted post. That's going to be offline, off-chain rather, not offline. So each supernode will be able to compete to choose the best promoted posts to display to users in order to gain the highest amount of promoted post expenditure. So that decentralizes the selection of promoted posts in every interface and enables competition between interfaces to actually show those posts and rewards them for doing so. So that provides incentives for every interface. Even if it's a third-party interface, something that often happens in other protocols is the part that is valuable. For example, like if any interface for example, the BitTorrent protocol tries to sell access to the BitTorrent protocol or sell a premium feature, then you always find other clients that do the same thing but without charging a membership fee. So you have undercutting of things like that. So what will eventually be the case for EZIRA is that there'll be interfaces that just display that take off promoted posts without having a membership. That was an edge case that I'd been thinking about. What happens when other interfaces just show EZIRA content posts without the promoted post being included? So this is a direct incentive for every interface creator to actually earn funds from displaying promoted posts, and because they earn from memberships, they'll also have an incentive to sell those memberships and actually remove promoted posts from the accounts of members on the blockchain. So this actually provides economic incentives for each interface to actually follow the rules and implement the membership features on their own behalf for their own interests, regardless of what the eventual Nash equilibrium might be. So the last thing I'll talk about today, which I referenced in the project updates, is the anti-bot voting mechanism. And that's here in the content reward pool section. So it states voting bots are a major concern that have reduced the quality of content on other blockchain social media platforms. EZIRA mitigates this issue by reducing the effective vote value when repeatedly made to the same author. Votes repeatedly made to the same author's posts decay in voting power by 20% per vote within the previous 7 days. This acts as an incentive to upvote the posts of different authors to earn a higher amount of content rewards from curation, and it makes voting bots less effective when used on multiple votes in a short time period. So there'll be it'll get increasingly expensive to continue to use promoting bots to upvote the post of a user, because it'll be having a 20% reduced effect for each upvote within 7 days from the same voting bot. So this acts to essentially decentralize the holding of voting power to a variety of different accounts instead of having large accounts that control a massive amount of voting power. And it makes it more valuable for each individual to do their own curation instead of just delegating it to an upvoting bot. So I think we'll hold that up a little bit there, and we'll come back to the community for any questions that you guys might have. So what do you guys think of the new white paper changes? And I'll just drop that white paper link once more. So everybody will be able to take a read of the new and updated EZIRA white paper that will be finalized, edited, and placed on EZIRA.io within the next 7 to 14 days.
Brilliant work on the voter decay. Applause.
Thank you. Yeah, so one of the biggest, I think, front-facing and user-visible problems on Steam is if you just go to the trending page and you look at literally any post and you go to the upvote list, every single one of them has Smart Steam, $80. Up Me, $70. Up Me Bot, $50. Um, well, there's a whole bunch of other voting bots, but they have the same. I know their names. I can roll their names off, and the reason is because I use them as well. There is an economic attack that is very valuable on Steam right now, and that is to pay for upvoting bots. And it's an edge case in the Steam protocol that has only been realized now that the free market has been applied to find every single little economic incentive to make money off of it. And I don't blame the Steam team for the outcome of what's happened, but this problem does literally deteriorate the ability for the Steam blockchain to select high value content simply by allowing posts to be paid for upvotes. And there's nothing that the Steam team could have done to predict this. I think they did make some attempts to predict it in the white paper, but they didn't make any protocol level incentives or mechanisms to work around the problem. So EZIRA will be including a vote decay mechanism that reduces the voting power for posts made by the same author within the prior 7 days by 20% per vote. So that makes it 20%, increasingly 20% more expensive each time you purchase a vote from an upvoting bot to go to your account. And ways and means around this would probably be to make different accounts and post across different accounts. But it does, in a way at least, hinder the use of a voting bot to push posts up the trending page with no mitigation against it, by the same account at least. So there's no way to prevent people from just making multiple accounts and upvoting the posts of multiple accounts. But this is a way for a single account to actually the important part is to change the incentive for the holders of EZIRA power to encourage them to actually use their votes to find their own high quality content that they perceive to be valuable instead of delegating it to someone else. So this makes it more valuable to do your own voting instead of having someone else do it for you. Does anyone have any other questions, concerns, comments? We have Chucky, who says the UI on Steam is whack at the moment. So in many ways, it is a little bit off. I don't know what it is, but I think that the images, it needs to be more focused on images. Busy is better. I do agree on that, and that's why Busy was chosen to be the template for the EZIRA.io interface. It's much more image focused instead of being so compressed with essentially going for a Reddit approach. It goes for a more Facebook style interface that puts more focus on images and makes for a much better scrolling experience without needing to click on each individual little post to open it, which slows down the user experience and prevents actual scrolling through the interface. So that's why we'll be starting with busy.org as the template for the EZIRA web application.
Harrison,
Yeah.
there was a very interesting one that I think it was Steam Surfer version 1.0 or something like that. It was a custom template made for Steemit, which was actually amazing. Way better than Busy. I'll send the link to it in a little bit.
I'll definitely look
you can
into
check that out. It's actually pretty nice.
Very good. I'm all about different interfaces competing for accessing the Steam blockchain. It's very important that there be different ways to actually browse the Steam blockchain because that increases the decentralization of the protocol. So it's always great to have new interfaces coming up, but what they don't always have is a way to effectively monetize that interface. The only way they have to monetize that interface is to essentially place a tax on the posts. So what they do is they take a reward. What's the word again? I always forget that one. Essentially a reward from the content rewards of that account. So what that encourages is for people to go and make all their posts on the interface that charges the lowest post reward tax, essentially. So there's a race to the bottom to charge the lowest fees for allocating the reward to each interface. So eSteam is one of them, busy.org is another one, and they charge a fair bit, a fair chunk of people's content rewards. And because content rewards can always be made for free on steemit.com, people will generally gravitate to those where they won't be paying the tax, essentially. So what EZIRA does to change up that entire economic dynamic is it doesn't incentivize interfaces to actually push users to make posts in order to earn revenue. It incentivizes actual views on that interface. So it incentivizes the display of promoted posts by allowing each interface to earn from the promoted posts and earn from memberships. It encourages them to sell memberships, sell promoted posts, and sell the mechanisms that cause the EZIRA network to earn revenue. So they make a fee from every promoted post. They earn a fee whenever an account creates EZIRA network revenue. And the thing is, when an account does those expenditures on any other interface, there's no negative incentive for the user to make those things, those actions on any interface based on a cost to them. So they make their choices based on the quality of the interface, and they don't just follow the one who's going to charge the lowest taxes, essentially, because it's not earned by the user anyway, it's earned from the network revenue. So the actual amount that is paid by the user is the same regardless of which interface they use, but the one they choose to use is the one that earns the rewards. And the one that best encourages its users to make promoted posts and to purchase memberships is the one that will earn the best return on investment from operating their interface.
Harrison, let me ask, will EZIRA work that way, like having various UIs?
That's correct. EZIRA will have various UIs. It'll have the first one, EZIRA.io, that'll be managed by the EZIRA founding team. But I fully expect and encourage the EZIRA blockchain to have many different interfaces. In fact, we'll be having the EZIRA founding team create a mobile application, a desktop application that combines the full node software with the viewing graphical user interface with the SuperNode IPFS node interface. So essentially one program will enable a user to run an EZIRA node, run an EZIRA witness, run an EZIRA supernode, and actually browse EZIRA directly. So they won't have to use a command line for anything. We're going to make a GUI that does all of that stuff for every user. And we'll enable people to make their own versions of that so that there'll be competing implementations of the protocol. So we'll be having a maximum competition scenario for everyone to implement their own EZIRA interfaces, because each EZIRA interface will have very good incentives for getting new users to sign up to the EZIRA blockchain, for users to engage with the content, promoted posts, to create on-chain actions that actually signify that a user has engaged with a promoted post instead of relying on off-chain, very easily falsified numbers that they might see on something like a Twitter or a Facebook, where they routinely deliver a massive amount of fake views, fake link clicks by using bots to go through and click a link or click a view, essentially, driving up the cost of promoting on established and mainstream social media. So by actually distributing that revenue based on the provable signed transactions on chain, we'll be able to deliver a better marketing experience for everyone who wants to promote their posts. So without relying on Facebook servers to tell you how many people viewed the content, you'll be able to read the EZIRA blockchain and see exactly how many accounts signed a transaction that states that they have viewed their content, because they earn a reward for making that transaction. How are we collecting UX suggestions from the alpha? So I think by that you mean experience suggestions from the users of the alpha. So the answer to that is from community feedback. The EZIRA Telegram, the EZIRA Discord, this Discord Hangout. So all UX suggestions from anyone in the EZIRA project that has used the EZIRA alpha, they're definitely open for discussion within this Hangout, within the Telegram channel, and all over the EZIRA media sphere. If you found a bug, definitely let me know about that one, and I'll have Nick look into it. Okay, does anyone have any other discussion topics or questions about the new white paper and the new changes? And you can all take a read from the document that I previously posted just up a few chats. Okay, in that case, we will move on to the next section today, and that is the EZIRA discussion topics. And I made a few of these, I discussed a few of these previously throughout the white paper, but we'll go over them in a more focused way. So the topics for this week is what has been changed in the white paper. So the answer to that is the EZIRA reward is now based on requiring activity. So that means that everyone who is active on the EZIRA blockchain will earn a better reward over time. So there will be the reward essentially for holders who don't engage with the blockchain at least once every 30 days and who don't vote for witnesses, and essentially non-participatory holders of EZIRA will no longer be earning the EZIRA reward. So that will not be a passive income anymore, that will be an active income for holding that stake in the EZIRA network. So that'll require people to actually engage with the blockchain, and that won't be a passive investment, that'll be an active income from participating in the ecosystem. Additionally, the changes have been made to promoted posts to encourage each third-party interface to display those promoted posts and to choose the promoted posts in a way that will drive engagement with them instead of just choosing them randomly. So previously the idea was to choose them randomly. This was not a good idea, and that will be changed. They will be selected based on the calculations determined by each supernode, and supernodes will essentially have the on-chain data from the account that is currently logged into that interface, and based on those on-chain transactions they will make calculations as to which promoted posts are most likely to result in an on-chain action that causes a cost action to be fulfilled for that promoted post. So this allows people who create promoted posts to have a much better ability to determine and actually prove that their promotion expenditure has had a positive impact and actually gained them organic reach. The ordering of the EZIRA outline has been changed to bring the mobile application forward, to bring events forward, and additionally to move EZIRA Stealth back to a later release, because that will be a little bit more technically demanding to implement ring signatures, ring CT, and confidential transactions from the Monero protocol into a Graphene protocol, that will be developmentally expensive. So that will be moved later on in the EZIRA project lineup, and the mobile application will be moved forward to enable people to engage from their mobile or tablet device, where the majority, in many ways, of web traffic is coming from. And one of the problems that Steam made was they relied on third parties to make their mobile application for them. EZIRA won't be making the same mistake, because what has happened is there is now essentially the eSteam application, which is a great application made by, I don't exactly remember the name, it'll come back to me in a moment, of the developer of eSteam, that essentially places, I believe it's a 10% tax on everyone who creates a post through that interface, which is good for the developer, but it's going to discourage people making posts from that application and instead rely on the free applications like Steemit.com and things like that. Yeah, just like DTube, DAudio, places like that. So if content posts can be made where the reward is maximized, people will choose the free interfaces. So we will be changing the incentives for third-party interfaces to earn their funds not from taking a tax on people's post content rewards, which discourages activity, and instead earning revenue from the creators of promoted posts and actually delivering on-chain verifiable proofs of interactivity with the EZIRA blockchain network. So we'll move on to the next topic, and that is the question, how does EZIRA manage voting bots? So this was explained in the white paper changes. EZIRA will be managing voting bots by having a mechanism to decay the effective voting power of each holder of voting power by initially 20% per vote made within the prior 7-day rolling period. So that means if you try to make a post every day and have the same upvoting bot, try to upvote it, by the end of that week you'll have something like it'd be almost like well and truly over a 50% reduction in voting power. It'd be 1 divided by 1.2 to the power of 7, whatever that is in a calculator. So a 20% multiplicatively stacking decay on the voting power of each author in a rolling 7-day period. That's right. Thank you, Chucky. And those two numbers, both 20% and 7 days, they will be witness parameters. So if that is not sufficient to mitigate the profit motive of voting bots, then those numbers can both be increased over time. And that'll be up to the witnesses to decide what numbers best suit the EZIRA network to not have a massive reduction in voting power, but enough to encourage organic discovery of content through curating it how the Steam mechanism was supposed to work. So if those numbers get too high, people will just make multiple accounts, and you'll have people make account number 1, account number 2, account number 3, and divide all their posts across them to get more rewards. You'll have things like that, so that it needs to be big enough that people have a disincentive to use voting bots, but not so big that people will just get around it by making multiple accounts or making multiple voting bots. So today there's something like about 10 or 15 voting bots on Steam Bot Tracker. What this will do is, at least in a later game situation, is divide up the amount of voting bots that exist to something on the order of 2 to 3 times what exists on Steam now, because they'll have an incentive to make the amount of bots larger so that they have a lower amount of collisions with the same authors. So this makes steps in the right direction to mitigating voting bots, but there will definitely be free market ways of circumventing this that will need to be continually updated, because this is a Nash equilibrium case where there is an incentive for people to offload the cognitive cost of curating onto other people, but there needs to be some sort of on-chain way to mitigate this, to actually encourage people to promote, to curate their own content rather than getting other people to do it and having those people just sell it straight out to the highest bidder. And the last question is, how will promoted posts work? So they will work and in the following way. User will make either a post, or there are multiple different types of content that can be chosen. It doesn't have to be a post, it can also be, I'll just go through them. So there can be a promotion of a standard post, of a premium post, that's a post that requires a micropayment to unlock. Promotion of a link, so not a link post, just a link. Promotion of a board, of a public group, of an account, of a store, of a specific product in a store, of a specific crypto asset. So that's any asset on the EZIRA decentralized exchange can be the subject of a promotion expenditure. And these all have their own independent or own individual cost per X costing mechanisms that are relevant for each object to actually drive engagement with it. So for premium posts, it includes cost per purchase. So that means that the amount paid to actually promote the post, 20% of that is divided to all of the interfaces that actually drive purchases of the premium content. So they can pay an amount to actually display that on interfaces. Each user is able to whitelist the interfaces that are able to earn this. So they'll be able to take off interfaces that are not to their choosing. And it allows each advertiser or each promoted post creator to have control over where their posts are actually going to be paid. So they can't control where they're shown, but they can control who earns money from them. So because they're made publicly on IPFS, they won't be able to control where they're shown, but they will be able to have direct fine-tuned control over which interfaces can actually earn a part of their reward. For a link, it shows an image, a gallery, or a video with a link to an external web page or application. So that'd be the same as what you might see on Instagram, except that's not chosen by a single central third party. The interface will be able to choose between a variety of supernodes to select which piece of content is actually shown to each user, and they can have cost mechanisms from impressions, from click-throughs, from on-chain views, on-chain votes, shares, comments, and follows resulting from that post. So these are all in the EZIRA whitepaper, and some of the more interesting ones are the ability to promote an account, which shows the account's profile image, and that can be, for example, cost per follow, cost per account vote. So you'd be able to pay a promotion to each interface that drives votes to your posts. So therefore that interface would have an incentive to actually show all of the posts from that account, because they'll be earning an amount per vote made to that account. So there's a much greater space of things that will be able to be promoted than on existing centralized social media platforms. For stores, there'll be the ability to promote store purchase volume. So each interface will have an incentive to show the products that that store sells, and whichever one is able to drive the most volume to that store will be earning a greater share of the promoted post expenditure. And one that is uniquely EZIRA is a promoted crypto asset. So each asset has the ability to be promoted. So you can essentially pay to advertise a specific crypto asset by showing its 24-hour price range, a trading button to go and trade it on the EZIRA DEX. And that can be cost per impression and cost per volume traded. So whichever exchanges that use the EZIRA blockchain, they will be paid proportional to the on-chain volume that they drive to the asset. So essentially there are many vectors that can be included in a promotion expenditure, and each one rewards the interface that drives that interaction. So we move the entire funding model for third-party applications to actually driving engagement instead of simply taking a tax from people's content rewards. Yeah, that's one of the important parts of EZIRA that makes advances over Steam, measuring on-chain views. So whenever you view a content post, for example, the author of that post earns rewards based on the amount of on-chain views it gets. So yeah, the analogy is very strong. What gets measured gets modified and gets improved. So we will be measuring on-chain views. So then we can actually encourage viewing of EZIRA content, whereas on Steam, the money ends as soon as the post gets made. So in a way, there is an incentive for each Steam interface on Steam as it exists now to actually encourage their users to purchase upvotes, because they'll earn a higher percentage of they'll earn a higher amount from the content rewards of that post, because the content rewards are artificially inflated by purchasing a bot vote rather. So we move the incentives, and hopefully, ideally, that will move the outcome to something that is better for everyone and better for blockchain social media as a whole. So does anyone have any questions about the discussion topics that we just went through?
Loud and clear, Harrison.
Yep. Do you have
Kind of.
Yeah, go ahead.
Yeah, I kind of wanted to know, like, how the witnesses work on EZIRA, and like, let's say I'm a top 20 or 30 or 40 witness. Will I have a say in like changes to the EZIRA network?
Yes, you will. So there are many ways that EZIRA witnesses have influence over the course of the EZIRA network. So the first and most important of which is they get to choose the witness parameters. So these are the numbers that govern the particular tweaking. They're like the knobs that can be tweaked to change the functions of the EZIRA blockchain. So instead of requiring a hard fork to actually change specific numbers in the EZIRA code, will enable witnesses to choose those specific numbers. So there'll be a lot more witness parameters that are able to be chosen, such as the percentage that is mitigated when you repeatedly upvote an account. So that is a witness parameter. A lot of the EZIRA coin issuances will be witness parameters. It'll have a fairly fixed value, but if any of those need to be changed, then the witnesses will be the movers and shakers on that front. And importantly, the executive board of EZIRA that operates instead of a private company. So instead of having a private company be the custodian of the chain, essentially like steemit.org or steemit.inc rather is, there'll be an on-chain account called EZIRA, just as exists on bitshares at the moment, that is the primary governance account of the network, and that'll be managed by the EZIRA executive board. So all of the ownership structure will be on-chain and transparent and verifiable, instead of it being made behind closed doors in secret contracts and things like that by steemit.inc. And that account will not actually be controlling a massive supply of voting power. It'll have a reserve of 250,000 EZIRA, or the executive board reserve, and the rest will be allocated to the individuals within it. So that account will have an ongoing basis of voting power. It'll have the ability to issue EZIRA credit, That is the main function of the EZIRA Executive Board, to determine which EZIRA credit issuances are passed and which are not. So each, yeah, go ahead.
I'm sorry, didn't mean to interrupt you. So it's like if I want a credit, like I want a delegation now on Steemit, I'd need to ask the EZIRA account for it, pretty much.
By delegation, that would be done by each individual account. So EZIRA won't be specifically delegating voting power to individual accounts. It'll be making votes as the executive board as a whole. So if 5 out of 8 of the executive board approve a transaction, then that gets made. And each vote gets made as well. So people are free to choose to delegate their EZIRA voting power to any other account that they want. Anyway, getting back to
you just mentioned.
Go
sorry. You just mentioned the EZIRA credit. I thought that's what you meant by like the delegation stuff.
Okay, so what EZIRA credit is? This is in the white paper. EZIRA credit is the asset that allows the EZIRA Executive Board to generate an expenditure from the network revenue of the EZIRA blockchain. So the network revenue that comes from memberships and post promotions and trading fees, that's used to buy and burn EZIRA coin, and it's also used to buy and burn EZIRA credit. So what that means is that the revenue that comes into the EZIRA blockchain is actually directed back to the holders of EZIRA coin and to the holders of EZIRA credit. So what EZIRA credit is, it's an asset that represents a portion of the future network revenue of EZIRA, because it gets bought and burned whenever its price goes below $1 EZIRA dollar. And the EZIRA main account is able to issue this asset to pay for community projects and to pay for the ongoing salaries of the EZIRA executive members. So those are elected positions. On-chain elections choose which account holders have those positions of signatory status over the EZIRA main account, and those accounts are able to generate EZIRA credit up to a very, very important limit based on its price. So based on the amount of public support for the EZIRA credit asset, people will choose to buy it and earn an interest rate for holding it. And whenever its price goes below $1, it'll be bought and burned out of network revenue. So it effectively allows the protocol to borrow against its future revenue in order to fund projects and things like that. It represents the debt of the EZIRA blockchain. And if that asset is, when it falls below $1, it is rebought and burned to pay back the debt. And if its price falls too low, its issuance is frozen, and all of the members of the executive board are ineligible for re-election, and their salaries are actually paid in EZIRA credit. So if it falls too low, or if they issue too much of this EZIRA credit asset, then the value of their own salaries will be dipped into. It'll decline. So it's a way for the EZIRA executive board to pay for public expenses and pay for their own expenses to develop the network infrastructure without requiring any tax on the issuance of EZIRA coin. So there's no fixed reward pool that goes to a specific account. It's only EZIRA credit that the EZIRA main account has control over. Anyway, getting back to your original questions about the witnesses. The main power of witnesses is that they choose the maximum salary, essentially, that can be paid to the EZIRA main account in EZIRA credit. And if it can't exceed a certain limit in EZIRA coin, and if the EZIRA executives want to increase their salary, then they need to increase the value of EZIRA coin, because it's limited, denominated in EZIRA coin. They have a direct incentive to increase the price of EZIRA coin, which obviously benefits everybody. They also have the ability to vote in the network elections based on the people that vote for the witness. So for example, every time there's an issuance of EZIRA credit, the EZIRA main account has to approve it, and the EZIRA blockchain community, which means 51% of all network voting power, also has to approve it. So each person or each account holder votes for each network election, whether it be choosing the members of the executive board, choosing whether or not to issue EZIRA credit in each individual circumstance. Those are chosen with on-chain elections, and they can last for up to 7 days or until they are completed by 51% of the voting power. So those ongoing network elections, if people don't vote for them, then it reverts back to their witness vote as essentially a proxy. So witnesses basically act like a committee of proxies, so that when you vote for a witness and you don't vote in a network election, then you automatically copy the vote of the group of witnesses that you have voted for. So that gets around the non-participation of on-chain democracies by delegating your voting power to witnesses if you don't vote. So if you don't vote, it reverts to the vote of your witnesses as a group. So if you vote for, say, 10 witnesses, 10% of your voting power gets divided between each witness that votes. And each witness is heavily encouraged and advised and pretty much required to vote for every on-chain election. Because when there's an on-chain election for particularly the election of the EZIRA executive board members, those elections actually have a reward for each account that votes in them. So you will earn a small, very tiny reward every time you vote in a network election. This is in the white paper. So that obviously the other main power of witnesses is to create blocks, to choose by a 3/4 majority on the introduction of a hard fork, and they have the ability to access delegated voting power from people who do not participate in the network elections. So they will be the key players that decide quite a few aspects of the EZIRA protocol.
Loud and clear, Harrison.
Yeah.
That actually covers a few thoughts in my head. I think it's really well structured and thought out. It's important. Governance on the chain is the most important aspect of it, and it's the only thing that will keep it going, you know?
That's right. Governance is the most important aspect. I think of higher generation blockchains. So for things like Bitcoin, the proof of work blockchains, they have their purpose in the assertion, essentially, that there is no governance. The value of things like Bitcoin and Bitcoin Cash is that there is no governance, because hash power is governance. So they have their place for the raw, long-term storage of value, essentially. In order for projects to have usable applications, then they need to have different consensus mechanisms that allow for faster transactions and free transactions. So delegated proof of stake, I think, is the next generation of blockchains. So the first generation absolutely has their place, and the second and third generations implement governance, implement better transaction times, better no transaction fees, and in order to do that, you have to be able to choose who creates the blocks. And to choose who creates the blocks, that's done by the voters, which are the holders of EZIRA and EZIRA Power and EZIRA bonds. So the selection of witness parameters is also what chooses the value of smart coins. So on the EZIRA network, there will be the EZIRA dollar and a wide variety of other smart coins based on the market pegged asset protocol used by bitshares, which will allow an on-chain fiat pegged asset to actually function, unlike the EZIRA dollar, which wanders anywhere between $1.50 and I've seen it at bloody $3. It went up to $3 at one point, and it's supposed to sit at $1. The bitUSD does not move past $1 to $1.05. It's very stable, and the reason for that is because it is borrowed into existence and collateralized by bitshares, which are then used to buy and destroy it when the price falls. So it's very stable because of the way it's made. That's why EZIRA chose the bitUSD asset to be the basis of the preliminary ICO for the EZIRA project. So we'll be changing from the current debacle that is the Steam dollar and moving back to the original market pegged asset structure that is backed by a EZIRA coin to actually make smart coins work properly. Because right now Steam dollar doesn't work properly. Yep, go ahead.
I'm sorry to ask all these questions, just trying to get a few things out of my head. So.
That's very good. If you want to...
so you're gonna...
Yeah.
So you're gonna have like a smart contract like holds BTS and collateral, just like the bit.USD one works, but it will be like EZIRA dollar or something like that.
That's right. So it'll be the EZIRA dollar, and it'll hold EZIRA coin in collateral. So EZIRA coin will be holding collateral to back the EZIRA dollar, and all those transactions will have no fees. So the EZIRA dollar will be the first smart coin to have no transaction fees. So John Robert, I know for a fact that you're a big fan of smart coins and smart fiat market pegged assets. So that's one of the major cases that makes the EZIRA project valuable for usage across the world, is it enables smart coin transactions for 0 fees. So on bitshares it has a small fee of around about 2 cents, but if you want to be enabling micro payments in smart coins, like 5 cents to unlock a post or even 1 cent to view a video, then you need those transactions to be free. Not low cost, they need to be free, so that there's 0 marginal cost to transactions. So you can get the transaction fees very low on bitshares, but they don't go to 0 on bitshares. Where they need to go to 0. Well, in order to work properly, they need to go to 0. That's correct. I second that sentiment, Chucky. Absolutely fuck US dollar tether. Absolutely. It's the biggest scam that has been perpetrated on the cryptocurrency community, even before BitConnect and things like that. It's essentially the fiat US dollar asset of Bitfinex. What it really is, it's an omni-layer asset that can be printed at will, that supposedly backs US dollars in a bank account somewhere that has never been audited or proven. So what we'll be doing with BitShares and with EZIRA is allowing the creation of smart coins that are provably on-chain, backed by EZIRA coin or BitShares collateral. BitShares will have those transactions for a very low fee. EZIRA will have no fees. No fees on transactions with the same market pegged asset mechanisms that make the bitUSD work so well. What we'll also be doing is, this is an important part of the EZIRA DEX, is enabling the creation of Bancor asset arrays. So for those of you who are familiar with the Bancor protocol, what this enables is for asset creators on EZIRA to make a liquidity pool between their chosen asset and either EZIRA coin or EZIRA dollars are the two that will be chosen. So it'll create asynchronous liquidity between each user-issued asset and EZIRA dollars and EZIRA coin. And others can be included as chosen by the creator of the asset. So that's where the liquidity pool comes from. That's from the Bancor protocol, which is actually decades old. Originally, it was intended to be the mechanism for valuing fiat currencies with respect to each other, because when it was a big fancy idea to make a one world currency, they wanted to make a currency called Bancor that was valued with respect to all other currencies in a specified liquidity pool. So Bancor was going to be the first currency valued by every other currency, but at the moment the Bancor network token fills much the same purpose as the original design. So what we'll be doing is enabling liquidity pools to have liquidity, what they're called a connector points or connector assets between EZIRA coin, EZIRA dollars, EZIRA, and the user issued asset that each person has made. So each asset will have its own liquidity pool backing it, against price volatility, and it'll incentivize the usage of market makers to reduce the spreads down to a marginal cost of pretty much zero. Like a forex market in crypto, not quite like a forex market, like the Bancor token market. So if you look up Bancor, they have a fantastic decentralized exchange that doesn't have any order books. It has a series of connected liquidity pools. So the Bancor network token acts as the liquidity connector between all of the connected Ethereum tokens. So in many ways, it's better than a lot of the on-chain Ethereum decentralized exchanges that have been major use cases that BitShares have been doing for years. A lot of the best ICOs in Ethereum are just decentralized exchanges which do the same thing as BitShares did like 4 years ago. Many of the best Ethereum ERC20 ICOs have been decentralized exchanges, but BitShares did them years ago. So we'll be moving that model onto the Graphene blockchain, where the transaction speeds will be on the order of 3 seconds and there'll be no fees. So instead of paying gas fees to actually go through a liquidity contract, that transaction will be free. So EZIRA won't be taking funds from transactions, which are the important point that we need to actually grow the use of cryptocurrency. It'll be making returns from selling memberships and from selling promoted posts and from having fees on the trading of assets that are free for the creation of limit orders. When you create a maker order, that's free. When you take the order with a taker order, that's when there'll be a small fee. So it encourages liquidity, and it encourages a thick order book and market makers. Does anyone have any other questions? And for those of you who haven't already, I will again post the EZIRA whitepaper. So this is the latest EZIRA whitepaper. So when is EZIRA Coin live? To John Robert, the answer is at the release of the mainnet blockchain. So the testnet will not have EZIRA Coin. EZIRA Coin will be live and issued from a balance of 0. It'll start with no supply, completely no pre-mine on EZIRA Coin, no pre-allocation of EZIRA Coin. That'll start from 0 to the first contributors to the blockchain in the release of the mainnet. So testnet will have test EZIRA, and the mainnet will have EZIRA and EZIRA Coin. So that's the new white paper. Take a look through, let me know what you all think. Take a look particularly at the promoted posts and the changes to the EZIRA reward allocation. So they have been made to promote on-chain interaction to ensure that people earn an EZIRA holder reward based on their activity. So their activity is required to earn the reward instead of having passive stakeholders earn massive amounts of the reward. This benefits everybody who uses the EZIRA blockchain. What it does not benefit is passive holders of the EZIRA asset. So anyone who was originally going to just leave their EZIRA is not going to be earning as much as they could by actually using EZIRA. That's right. Thank you, Chucky. And does anyone have any other questions today about the EZIRA whitepaper before we go on to the EZIRA meme competition round 2 and the winners of that? EZIRA World Takeover, says John. So World Takeover is not guaranteed. It is a work that will take a concerted effort by the entire EZIRA community, and especially myself, for many, many years. Too much info. It's the white paper is fairly extensive, but just reading the white paper is the best way to gain a greater appreciation and understanding of the project.
Yeah, I will. I'll take a look at it. I haven't read through it, to be completely honest,
That's
and
fine.
half the stuff you're telling me like completely makes sense, and I see a lot of potential in it. So, I'm looking to be building something pretty big on EZIRA, to be honest. I
Very
don't know
good.
what, but I'll
Very
work
good.
on it.
Very good. So some of the other changes that have been made to again promote the initial community pioneers is the share drop allocation has been shifted to distribute 250,000 EZIRA to the pioneers of the blockchain. So these are, I'll just bring the white paper up. These are allocations to the, here we go. So the community pioneer distribution. So previously there was going to be 1 million EZIRA distributed to all the share drop balances. That has been reduced by 500,000 to increase the amount offered in the main ICO. Alongside with the annual coin offerings, that has been reduced to 3 million to increase the main ICO to 3 million EZIRA. So 30% of the total issuance of EZIRA will be in the main ICO. That'll be taking place over the course of 100 intervals of 23 hours. So that's on the order of 3 months or so. So over the course of 3 months, the main ICO will take place, whereby any account that sends bitshares or bitUSD to the EZIRA account on bitshares will participate in those daily auctions. So it'll essentially be the weekly auctions scaled up to 20,000 per day, and that'll be alongside a concerted marketing and community outreach campaign. So other coins will be accepted in addition to bitshares and bitUSD, and they'll be converted into bitshares and bitUSD accordingly. So the currencies that receive an allocation for the share drop have been changed from 10 to 6. I believe I mentioned this last week. So Steam and BitShares will get 75,000 each. Bitcoin and Bitcoin Cash, EOS and Ethereum will each get 25,000. The other coins have been removed for streamlining the process of share dropping and to reward those networks that have provided a greater initial influence to the EZIRA community. So for the assets that are not based on graphene, so that's hang on, no, right, change that around. For Bitcoin, Bitcoin Cash, EOS, and Ethereum, these assets won't be included in the share drop. Steam and BitShares will be included in the initial blockchain distribution. The other four will not be in the initial blockchain distribution. They will be distributed over a course of 50 weeks with 2% per week to the registered balances on chain and to the holders of assets on EZIRA that back those particular coins. So that'll encourage an initial influx of liquidity onto the decentralized exchange. Anyway, getting back to what I originally planned to discuss, the community pioneer distribution. So 5,000 EZIRA will be going to the creators of the top 10 subscribed boards, to the top 10 verified accounts with the highest following numbers, the 10 business accounts with the highest marketplace sales volume, the 10 accounts with the largest amount of referred and registered accounts, assuming each account has a balance above 10 EZIRA dollars, so spam accounts do not count. 5,000 EZIRA to the 10 accounts with the highest content rewards earned 1 year after launch. So 1 year after launch, the Pioneer distribution will be going to the 50 accounts that have made a significant impact on the early EZIRA community by creating high quality boards, by gaining large followings, by creating engaging businesses that sell a large volume of products on chain, to the creators of referred and registered accounts, so onboarding new users, and to the creation of high quality content using content rewards. So that's the Community Pioneers distribution. That will be replacing some of the share drop. So instead of having a large amount that may go unclaimed on account balances that are not used very frequently, or people may not be willing to import their private keys, those allocations will be made 1 year after the launch of the mainnet. Yeah, so this is all in the white paper. I'm reading from the white paper. Okay, so if no one has any further questions, we will move on to the discussion of this week's weekly auction. So we'll discuss this week's weekly auction. So in the EZIRA Weekly Auction, up to 5,000 EZIRA is distributed between bidders to the EZIRA address each week. The auction closes 1 hour after each EZIRA Hangout. The minimum price per EZIRA is 50 cents bitUSD per EZIRA for the first 2,500 bitUSD only. So that minimum price is for the first 2,500 bitUSD only. After that, the price does increase up to a maximum of 1 bitUSD per EZIRA. So the supply will be reduced if less than 250, less than 2,500 EZIRA is purchased in the auction, or increased if the converse occurs. So you can make a purchase of EZIRA below its current market price by sending bitshares or bitUSD to the address EZIRA on bitshares. So that's EZIRA, EZIRA on bitshares. And if you're interested in reading about the investment thesis or why you should consider making an acquisition of EZIRA, you can read all about that at ezira.io/investment, where you can read the investment thesis that discusses all of the potential market cases that will be bringing in revenue share and ongoing account revenue to the holders of EZIRA and EZIRA coin at ezira.io/investment. And I'll just show the YouTube viewers how they can make a contribution to the EZIRA crowdfunding campaign using the auction or using the BitShares interface. So you can head to ezira.io/investment and you can proceed down there to read about the EZIRA awards, the network revenue, and the potential network growth and the incentives for that. And you can read the investment thesis, and we have 67 days of time remaining for the preliminary ICO. And you can click this button here to purchase EZIRA by going to exchange.ezira.io /market/EZIRA_USD. So this is a trading pair for the EZIRA asset against the bitUS dollar. And it's from here that you can see the current order book for the EZIRA asset, which has been doing quite nicely over the last few days. We've seen some orders up around the 95-cent mark over the last couple of days. So there's fantastic ongoing interest into the EZIRA asset on BitShares. And it has maintained its price even though the BitShare itself has in fact fallen quite a bit recently. So BitShares itself haven't been doing all that well lately. They've gone from 14 cents. They just keep getting dumped apparently with the reducing price of Bitcoin. So EZIRA has held a price of 95 cents at the moment. So it's moving as a contraindicator to the price of BitShares at the current point in time. And you can purchase EZIRA using either bitUSD or directly with BitShares itself. So we've seen over 18,000 BitShares worth of volume traded today, where all this volume has been trading the EZIRA asset completely organically. In fact, it has more trading volume in the last 24 hours than the bitUO or OpenSteam. That is fantastic to see. OpenSteam with 6,000 BitShares of volume, EZIRA asset with 18,000 BitShares of volume at the moment. All organic volume. Provable on-chain that has not been done by the EZIRA main account because all those orders have been signed by those people initiating those transactions. So unlike Bitfinex, unlike Poloniex and Binance and the wide variety of centralized exchanges, the EZIRA BitShares order book is actually completely on-chain and viewable and auditable to prove that there has not been any fake volume onto those trading pairs. And to make a contribution to the EZIRA Weekly Auction, all you have to do is go to your BitShares wallet of choice. You can use exchange.ezira.io to be sure that the interface you are using is valid and has not been DNS hacked, as has been the case with some other BitShares interfaces as of late. So to send a bid to the EZIRA Weekly Auction, all you need to do is type in EZIRA here and click the lifetime member. EZIRA is a lifetime member, EZIRA, and you can send whichever quantity of BitShares or bitUSD you so desire to the EZIRA Weekly Auction. And you will be able to access EZIRA at the minimum price of 50 bitUSD cents per asset for the first 2,500 bitUSD only. And as you can see, the price structure, the issuance of new EZIRA takes place at the moment at $1 bitUSD per EZIRA, and its current trading price is on the order of 95 cents. You can also trade on the open.btc or BitShares or open.eth or open.steam base pairs, all on the exchange.ezira.io portal to the BitShares blockchain. The only BitShares trading interface that has open.steam as a base pair. So as you can see, the open.steam base pair allows anyone to make a transaction of EZIRA for Steam. This is not anything I've seen on any other interface using open.steam as a base pair. So if you've got some spare Steam and you want to make an allocation into the EZIRA blockchain, then you can purchase your EZIRA for 0.42 Steam at the moment. Okay, so that's the weekly auction covered for the moment, and we will move on to the winner of the EZIRA meme competition round 2. So we'll head to the competition section of the Discord, and we will see the entry from Jose Carrag with their entry in Spanish, and it's I believe it's from the movie Braveheart, where they've got July, August, and 1st of September as being a giant rallying call for the EZIRA preliminary ICO, with the links to the Telegram and Discord included. So it appears that that has been the only valid entry for this week's competition. So this week's competition wasn't too widely promoted. It was only on the Hangout, so those who tune into the Hangout each week have first and best access to the EZIRA project's recent endeavors. So that was in the last Hangout that was discussed. So the winner of this week's EZIRA meme competition number 2 is Jose Carrag with their meme based on Braveheart. Fantastic job. So they'll be winning 100 EZIRA, or if they are present in the EZIRA Hangout, then that'll be 150 EZIRA. Jose Carrag is here. Fantastic. So that's 150 EZIRA to Jose Carrag with his EZIRA meme entry. Very good. Okay, that pretty much wraps up this week's Hangout. So last thing we'll do is we'll go over to the general discussion and questions and answers. So this opens up the floor to everyone here in the EZIRA Hangout to ask me any questions about the EZIRA project that have not previously been brought up. while we're here, and I'll be happy to answer all of your questions. You can also email me at harrison@ezira.io for any other queries, team role applications, proposals, or business matters. And you can join the EZIRA Telegram channel at www.t.me/EZIRA Network. Does anyone have any other questions about the EZIRA project for this week?
I'm just pretty pumped about the zero crypto equity. I think that's super promising.
Very good. Very good. Thank you, John. Yeah, so it's the first blockchain that I know of that has had a separate asset that has been sold in an ICO to what is intended to be used as the medium of exchange and issuance currency in its base blockchain. So I think that's the mistake that a lot of projects try to patch over, is they sell a massive amount of the coin that is supposed to be issued to the people who contribute to their project or contribute to their blockchain. They sell a lot of it in advance. So what that does is it creates a massive dumping pressure as soon as the project goes live, for a sudden rush of liquidity from all the people who have previously bought it to just dump it, because people will be buying it up to interact with it. So that devalues the initial contributors that are very important to the founding of the blockchain. So the EZIRA coin asset will be issued from zero, and it'll be done in such a way that it does not dilute the value held by the EZIRA holders. So each holder of EZIRA will be holding one of a limited supply of EZIRA assets, of which there'll be only 10 million, and EZIRA coin will be distributed to those holders on an ongoing basis when they interact with the EZIRA blockchain on a minimum basis. So other blockchains, particularly Steam, they inflate away the holdings of Steam Power holders by issuing new Steam. So EZIRA holders are never inflated away. EZIRA coin is the asset that is used to reward network contributors, and that is issued at a fixed supply, a fixed issuance rather than a fixed supply. So 10 million per year is a linear issuance, and that gets bought and burned by ongoing network revenue. So the supply will reach a natural equilibrium when the amount being burned is equal to the amount being issued.
Did I get this right from the white paper that the EZIRA officers won't have any authority over the EZIRA coin or equity, but they will have authority over some crypto equity?
That's correct. So what the EZIRA executive board is able to do is propose and confirm the issuance of EZIRA credit. They do not have the ability to issue EZIRA coin. They do not have any access to a portion of EZIRA coin that is dedicated specifically to them. The developers, marketers, advocates, and witnesses, however, do have an allocation of EZIRA coin to them. The EZIRA executive board does not, and they are able to issue EZIRA credit assuming that there is market demand for EZIRA credit. So if there is no market demand for EZIRA credit, if the EZIRA executive board issues too much of it, or deflates away its value, or issues too much to spend on frivolous projects, then its price will fall because people will lose confidence in its ability to be repaid out of network revenue, and any potential essentially Keynesian policies to print lots of EZIRA credit will be thwarted by future administrations, because the issuance of EZIRA credit will be frozen if its price dips below 80 cents. And it will be rebought out of ongoing network revenue at a price floor of $1 to essentially buy it back and repay that debt on an ongoing basis. And if there is not enough demand to support that borrowing of funds by the EZIRA executive board, then that will not be able to take place. And they will only be, the members of the executive board are only paid in EZIRA credit, so it's in their interest to make sure that they don't use too much of it.
Yeah, sounds good.
Very good, thank you. So what I allude to in the white paper is that they have no control over the transactions. They have no control over the forks, over the direction of the protocol itself. What they do have control over is EZIRA credit. That is their domain of control. The EZIRA developers are elected, and they have the control over the direction of the protocol with respect to hard forks, which are approved by being operated by EZIRA witnesses. So there is a distinct and multifaceted separation of powers between developers, between essentially project leaders, which is the executive board, between the marketers, between the advocates. So the marketers, advocates, witnesses, and developers get elected on a minute-by-minute basis. They have to consistently gain voting support from the holders of EZIRA voting power. The EZIRA executive board is elected for a longer period of time on a regular basis, so that they can have a bit more consistency over making their projects actually finalized to completion, so that they can make projected expenses based on budgeting and things like that. But if they lose the support of the witnesses, then they will not be able to gain a massive amount of voting support for those individual candidates, because the witnesses will be holding a vast amount of proxy voting power by the people who don't vote themselves. So the witnesses will be the main guardians of the EZIRA protocol, and there will be 50 of them instead of just 21, and they'll all earn an ongoing issuance of EZIRA coin for their efforts. Does anyone have any other questions? Okay, so if no one has any other questions, then we will wrap up this week's Hangout and go into the after party. So everyone who comes to the EZIRA Hangout in person on the EZIRA Discord can join the EZIRA after party after the live stream is finished, where we talk about some other things that are important to the protocol that aren't necessarily captured in the live stream. So I'd like to thank everybody for tuning in to this week's EZIRA Hangout number 13, where we discuss the state of the network of the EZIRA project and the leaps forward that we have made to bring the graphene blockchain model to the world, and to enable many, many millions of people to access cryptocurrency in a way that has never been technologically or economically possible before. Using graphene and Steem and bitshares as a foundation upon which we make improvements, it'll be possible to bring in many orders of magnitude more people to use cryptocurrencies, and enable everybody to share information and value freely. My name is Harrison McLean, founder and CEO of the EZIRA project. Thank you all for coming, and good night. Together, we will build the next world. Thank you, and good night.